Imagine a sector that feels like it's been pulled straight out of, I don't know, a 1950s science fiction novel.
Right.
You've got these images of glowing green rods, futuristic cities, maybe even a little bit of fear mixed in with the awe.
Oh, yeah. It sits right at that intersection of, you know, terrifying and totally fascinating.
Yeah.
Quantum physics, geopolitics, and just hard economics.
And then you snap back to reality and realize this isn't fiction at all. It is arguably one of the most grounded, physical, and, well, essential industries on Earth right now.
It really is.
We were talking, of course, about nuclear energy. And look, I know what you're picturing. You're seeing the 1970s, big concrete cooling towers, maybe a three-eyed fish from a cartoon.
Yeah.
But the reality today is a completely different story. This isn't just about keeping old power plants running. This is next-gen tech. It's AI demanding massive amounts of power and a total shift in the energy grid.
Welcome back to Everything You Need to Know About Finance. I am incredibly hyped to get into this one. It's great to be here. The whole narrative has shifted from, how do we shut these things down to how fast can we possibly build more?
Exactly. Now, before we really get the reactor core going here, I do have to drop in our quick mandatory heads up. We are exploring this sector and all the data for educational purposes only. This is not financial advice, okay? We're just taking a deep dive into the numbers and what they're telling us.
Precisely. We're here to map out the terrain, not tell you which button to push.
And hey, if you find this kind of content interesting where we try to make these complex topics make sense, please like and subscribe so you don't miss what we cover next. It really helps us out.
So today we're focusing our lens on a very specific instrument to understand this whole theme.
Okay.
We are looking at the VanEck Uranium and Nuclear ETF. It trades under the ticker NLR.
NLR. Sounds a bit like a secret government agency. So what's our mission for this deep dive? Why this specific basket instead of just, say, talking about uranium prices?
The mission is really to answer a fundamental strategic question. We all see the nuclear renaissance headlines, but how do you actually capture that?
Right. How do you invest in an idea?
Exactly. Do you try to pick the one startup that's going to invent some miracle reactor, or do you buy the entire ecosystem? NLR is the buy the ecosystem approach.
Yeah.
It tries to capture everything from the raw dirt in the ground all the way to the futuristic reactors of tomorrow. And we need to figure out if that strategy actually works or if it just, dilutes your returns.
All right, let's unpack this. When you say the ecosystem, what is actually inside NLR? Is it just a vault full of radioactive barrels of yellow cake?
No, it is definitely not just barrels of yellow cake, though that's part of the equation. NLR is an exchange-traded fund.
An ETF?
Right, and it tracks the NBIS Global Uranium and Nuclear Energy Index. So basically, it holds a basket of roughly 28 different stocks. And the key word here is diversity.
So it's not just 28 miners digging holes in the...
Far from it. Far from it. I mean, if you look at the breakdown, you have the uranium miners, yes, the companies digging the fuel out of the ground.
Their fate is tied to commodity prices.
Exactly. But you also have the utilities. These are the boring, steady companies that are actively running nuclear power plants right now. They're selling electricity to your house.
The ones that send me a bill every month. Got it.
That's them. Then you have the tech and services sector, so the people enriching the fuel, building the infrastructure. And finally, you have the moonshot category, the advanced reactor developers.
The moonshots. That's the exciting stuff. But before we get to the cool tech, I noticed something in the geographical breakdown. This isn't just a U.S. story, is it?
No, and that is a critical point. While about 48% of the fund is U.S.-based, this is very much a global play.
Oh.
You have significant exposure to Canada, sitting at around 17%, Australia at about 9%, and those are, generally considered safe, stable jurisdictions for mining.
Right.
But then you have the geopolitical wildcards.
Wait, mommy.
Kazakhstan makes up over 4% of the fund. And China's sitting at around 8%.
China and Kazakhstan, that adds a little spice to the mix. Why is Kazakhstan so important here?
It adds flavor and it adds risk. Kazakhstan is the world's largest uranium producer.
Wow.
It's the Saudi Arabia of uranium. You simply cannot ignore them. But it means this fund is sensitive to global politics, trade restrictions, stuff that a purely domestic fund wouldn't be.
So you're buying a ticket to the whole global nuclear market, warts and all.
You are.
Let's talk about the cast of characters then. If I look under the hood of NLR, who are the big heavy hitters? Who's driving this bus?
Well, the heavyweights are what provide the stability. The biggest holding, coming in at over 9% of the fund, is Cameco, ticker CCJ.
Cameco, the big Canadian miner.
Giant of the industry, yeah.
Yeah.
If you believe the world needs uranium, you generally believe Cameco is going to be selling it.
Okay.
But right next to them in the fund, you have the utilities. Companies like Constellation Energy, ticker CEG, and Public Service Enterprise Group, PEG.
And these feel less like a nuclear bet and more like a keeping the lights on bet.
That's how it used to be.
Yeah.
But here's where it gets fascinating. A few years ago, a utility was a widow and orphan stock. You bought it for the dividend and forgot about it.
Right.
But companies like Constellation have totally transformed. They're a major nuclear operator. They have real revenue, real cash flow, and they're suddenly cool.
So why are they suddenly cool?
It's the baseload argument. Wind and solar, they're intermittent. Nuclear is 2047. As these AI data centers spring up, they need power that never, ever turns off.
Never.
And Constellation is selling that premium, reliable, carbon-free power. They're waiting for a breakthrough. They are selling megawatts today to the biggest tech companies in the world.
So that provides a kind of floor for the fund,
Yeah.
a shock absorber.
A massive shock absorber effect for the fund, yes.
Okay, that's the safe stuff. But I want to talk about the spicy bets, the stuff that feels like science fiction. What kind of futuristic tech is hiding in this basket?
This is where it gets really interesting. The fund holds companies like OKLO Inc., ticker OKLO.
OKLO.
They're focusing on advanced small modular reactors, or SMRs.
SMRs, these are the mini reactors that people say could power a data center or a remote town, right?
Right.
Like a battery you never have to charge.
That's the vision. But notice I said vision. OKLO is what we call a vision stage company, meaning they have no significant revenue yet.
Yeah.
They're betting on getting their designs licensed and built in the future. Huge potential, but massive execution risk.
So you have a utility company that's been around for decades, sitting right next to a startup that hasn't sold a single reactor.
Precisely. And it goes deeper. You have Nano-Nuclear Energy, ticker NNE, working on even smaller microreactors. And then you have Centrus Energy, ticker LEU.
LEU. That sounds like a sandwich shop ticker.
It stands for Low Enriched Uranium. Centrus is crucial because they focus on fuel supply, specifically something called HALEU.
HALU. It sounds like a greeting.
It does, doesn't it? It's high-assay, low-enriched uranium. And it's the special kind of high-performance fuel that many of these next-gen reactors, like the ones OKLO wants to build, will likely need.
Ah, okay. So the fancy new cars can't run without the fancy new gas, and Centrus is trying to be the only gas station.
That is the perfect analogy. So Centrus is a pick-and-shovel play on the entire advanced reactor market.
It's just fascinating to see them all lumped together. It's like having a portfolio that holds both a steady government bond and a lottery ticket.
It's a fair analogy. You have the stability of the utilities dampening the Wild West volatility of the pre-revenue startups.
Speaking of volatility, let's get to the scorecard. We are recording this in early 2026. How has NLR actually performed?
Well, if you've been holding it for the last 12 months, you are likely very, very happy. As of late January 2026, the fund is trading in the $148 to $150 range.
And looking at the charts, it seems like 2026 started with a bang.
A massive bang.
Yeah.
Just in January 2026 alone, the year-to-date change was showing upwards of plus 21%.
21% in
Yeah.
1 month.
It's a staggering move for a single month, especially for a fund that holds boring utilities. You're usually happy if a utility gives you 21% in 3 years.
That is incredible momentum. What about 2025? Was that the setup for this?
2025 was the breakout year. The fund saw a return of roughly 55.94% over the last year.
Yeah.
It's enormous. And if you look closely, there was one period, the second quarter of 2025, where it jumped over 50%.
50% in a single quarter? That sounds like crypto numbers, not nuclear energy. What happened?
It was a sudden shift in sentiment. I think that's when the realization really hit the market, that AI data centers were going to drain the grid, and nuclear was the only answer for baseload power without carbon.
The market panicked upwards.
Essentially, yes. Big tech started signing deals, and the whole sector re-rated.
But, and there's always a but, it hasn't always been a rocket ship, has it?
No. And this is so important to understand. This sector has a history of extreme volatility. I mean, if we look back at the fund's worst quarter, we have to go back to Q3 of 2008.
The financial crisis.
Right. In that single quarter, the fund dropped nearly 34%. Now, 2008 was bad for everyone, but nuclear's had its own winters. Fukushima in 2011, for example.
Of course.
So while the current trend is a renaissance, a long-term chart shows you this is not a straight line up. It's cyclical.
So if you bought in a few years ago, you're up big. But you have to be prepared for the roller coaster.
I have to have a stomach for the dips.
Yes, which brings us to the big strategic question. If I'm listening and I'm convinced that small modular reactors are the future, If I think Oklo is going to be the next Tesla of energy,
Yeah.
why not just buy Oklo? Why pay the ETF fee?
That is the classic concentration versus diversification debate. First, let's just acknowledge the cost. NLR has an expense ratio of 0.56%.
Okay.
So for every $1,000 you invest, you're paying about $5.60 a year.
Which isn't free, but it's not highway robbery. It's the price of admission.
It's a standard fee. But here's what you're buying with that fee. Risk management. Let's look at the individual stocks. A company like OKLO or Nanonuclear is what we call a binary bet.
Binary meaning it's either a 1 or a 0. Win or lose.
Pretty much. They're vision stage. If the regulators approve their design, stock could skyrocket. A 10x return, maybe. But if there's a delay, a safety concern, they run out of cash, the stock could crash 50% overnight. It's extremely news sensitive.
So owning Oklo is like riding a unicycle on a tightrope. Thrilling, but you might fall.
And owning NLR is like riding a bus across a bridge. The bus might hit a pothole, but it's probably not going to fall into the canyon. Because NLR holds those utilities we talked about. If Oklo has a bad day, drops 20%, the utilities might be flat or even up a little. They smooth out the volatility.
Shock absorbers. I like that.
Right. You missed out on the pure, unadulterated upside if Oklo goes to the moon because it's diluted. But you also protect yourself from a total wipeout if the tech takes longer to mature.
And in nuclear, things always take longer to mature.
That is a very true statement. So NLR is really for the person who believes in the nuclear theme globally, but doesn't have the time or, frankly, the expertise to figure out which microreactor company has the best engineering team.
It diversifies away that single stock risk.
Exactly. You aren't betting on which company wins. You are betting that the industry wins.
Betting on the playground, not just one kid on the swing.
And that's a crucial distinction in a sector this regulated. One policy change in Washington affects the whole sector, but a design flaw only affects one company.
So what does this all mean for the future? We're seeing this massive run-up. Is the tank empty, or is this just the beginning?
Well, if we synthesize everything, NLR seems positioned for a world that's demanding two things at once. Reliability and low carbon emissions. We have renewed policy support from the U.S., from France, from China. That's a huge tailwind.
The governments are finally on board.
They are. The headwinds of the last few decades are shifting into tailwinds of subsidy and fast tracking. However, the future of NLR depends on whether this Renaissance narrative holds up against the reality of construction timelines.
Right. The risk is that the hype moves faster than the concrete pours.
Always. But here's a final, maybe provocative thought to leave you with. We usually think of growth stocks as tech companies, the startups, and we think of utilities as value stocks.
Grandma stocks, like we said.
Right. Slow and steady. But as AI data centers demand gigawatts of 247 power, and they're willing to pay a premium for it, we might see a paradigm shift. What if the boring utilities in this ETF, the ones with the existing plants, become the new high-growth stocks?
Because they're the only ones with the supply.
Exactly. They have the scarce asset, connected, licensed, operating nuclear capacity. You can't just build a new one in 6 months.
Wow.
So with NLR, you might be betting on a flip. The boring part of the portfolio becomes the growth engine, while the tech part provides the speculative upside. You're betting on both winning, but for different reasons.
That is a fascinating way to look at it. The utilities becoming the golden goose because they're the only ones with the juice.
Supply and demand. It always comes back to that.
Well, there you have it. From yellow cake in Kazakhstan to microreactors in a lab and the massive utilities keeping the lights on in between. That is the world of NLR.
It's a complex ecosystem, but a fascinating one to watch.
Absolutely. If you want to keep exploring the future of energy and finance with us, make sure to try out our latest episodes. We've got some great deep dives on the semiconductor supply chain that tie right into this whole power discussion.
Everything is connected.
It sure is. Thanks for listening, everyone. We'll catch you on the next deep dive.
Goodbye.